Our call, it's not a stock call that we're saying, is when we looked at Tesla and the inclusion in Tesla, it reminded us so much about 1998, the late 90s. And in the late 90s, AoL, similar to Tesla, it goes into the index late in the year in December. It was a seminal event. It kind of marked time.
Hey, welcome to the video. Wells Fargo head of equity Christopher Harvey believes Tesla could be the next AoL, and in this video we are going to discuss why he's completely missed the mark on this. But he does bring up some good points that we should consider, and just for fun, we'll take a look at his other top 10 predictions for the next year, and I'll give you my thoughts.
In the late 90s, AoL, similar to Tesla, a game-changing technology, incredible performance. It goes into the index late in the year in December after an amazing run, but it was a seminal event. It kind of marked time, because if you look at it, yes, 1999 was a fantastic year, right? But after 99, many of the tech and growth companies lost 50 to 100%.
So for all of you young viewers, babies, teenagers, in case you don't know, in the early 2000s, this happened. You can see a lot of these growth tech stocks were at an all-time high, including AoL, which was one of the biggest companies there was at the time, peaked here. And you can see that, yeah, it lost a tremendous amount of value. And what Chris is saying is that he sees the same type of bubble building. Right now, we are in an unprecedented bull market. Now, where I think he makes the mistake is he makes these broad generalizations about AoL, the fact that it was successful, the fact that it joined the S&P 500, and that it had experienced this meteoric rise equivalent to Tesla. But I believe this is where the similarities end. AoL was a web portal and online service provider. In 2001, at the height of its popularity, it had just completed a merger with Time Warner, which was the largest merger in US history, but it rapidly declined thereafter due to the decline of dial-up and the rise of broadband. So the reason AoL died is because a very, very strong competitor was just looming on the horizon, and it quickly started gobbling up AoL's market share in the space it was in. With Tesla, it does not have an equivalent competitor. Tesla is the broadband for the auto industry. They are the disruptor. This core premise of comparing the two is just wrong. He's only using the surface level direction of their growth and the amount of their growth to say these two are equivalent. But if you look at the core of the business models and their relative standing within the space they are in, they are completely different. One was the institution and one is the disruptor.
And what we're thinking in 2020, everything happens much faster. So if it took 12 months for the end to begin, now it's going to take 6 months. And so we're telling we're telling clients that they need to start thinking about not growth at any price, but they need to start thinking about valuation. They need to start thinking about cyclicality. They need to start thinking about getting more high COVID beta names in their portfolio and financials. Old economy, not new economy.
I agree with most of what Chris is saying here. Everything in 2020 and in 21 is going to be happening much faster. Due to this pandemic, companies that were going to die in 5 to 10 years are dying now. Companies that were going to dominate in 5 to 10 years are starting to show their domination now. So while he seems to believe that because we are in this bubble and Tesla is a part of this bubble, it will crash harder and faster, I believe that because Tesla is on the right side of this bubble, it is the future, it is part of our EV future, it will actually continue to grow. Now in the short run, who's to know? There will likely be pullbacks. The stock could actually drop a lot. But in the long run, Tesla is still one of the best companies to invest in. Regarding valuations and the cyclical nature of the market, I think he's 100% right. There definitely is a bubble right now. Especially when it comes to EV stocks. I think Tesla is one of the only EV stocks that have truly proven that they deserve a slightly inflated valuation due to their performance this year. They finally made profit. They are on track to hopefully deliver 500,000 cars this year and maybe even more than 1 million cars next year. A lot of stocks that are very popular have a slightly inflated valuation for a long period of time. I do think most traders and investors need to take a step back away from the hype. There are a lot of stocks being pumped up super high right now, and they do need to look back on fundamentals and realize that this can't last forever. And it's possible that it lasts longer than we think, but there is a cycle that the market goes through. And with every cycle, with every boom up, there will eventually be a slight dip or a correction. Regarding COVID high beta stocks, I believe he's just talking about stocks that are related to tackling this problem. High beta generally means it's a higher risk. And yes, it's a higher risk, but that means there will be higher returns. Now let's take a quick look at his other top 10 predictions for 2021. And this is just for fun. We already went over this first. first one, Tesla becomes the new AoL. I think it's pretty dumb, but if you have a different opinion, just let me know in the comment section below. If he's saying what I think he means to say, when he's referring to charts, maybe he's talking about the technical or fundamental analysis of a company. On paper, things just don't need to look good for it to grow. I'm not sure. I could be wrong about that. Number 3, GOP retains Senate control. I do think this is the likely outcome. So there are 2 Senate seats in Georgia, and they are very, very close. It's essentially a coin flip in both of the races. Democrats would have to win both of them to retain control of the Senate, and they already have control of the House, so that would mean they would have control of Congress. But this control rests on Kamala Harris because there would be 50 seats on both sides, and Kamala Harris would be the tie-breaking vote. So even if Democrats were to win both seats, they would need 100% agreement to actually pass anything in the Senate. So I do think this is a slightly likely scenario. Large cap underperforms average stock. I actually agree with this. Most of our large cap companies are very big and very old, and they can't compete with these younger companies that are born of this time. 2021 is the year of not good enough. I actually disagree. 2020 was pretty bad year, really good for the stock market. So if he's referring to the stock market, it probably might not be good enough. But if you're just talking about the year overall, I have very, very low expectations for 2021, especially based on how 2020 went. Any other direction other than 2020 would be a good direction, and I would think it's fine. Crypto as a preferred speculative instrument undergoes resurgence. This is already happening, and I think it will continue to happen as big institutional investors have started investing in Bitcoin. Bitcoin recently hit highs of nearly 28,000, and it's closing in on the 30,000 mark, which is record highs. I think this is definitely going to keep growing, especially as more and more people learn about it and they see major players investing in it. COVID-19 fatigue, lockdowns hurt incumbents' re-election efforts. I actually never really thought about it, but I think this makes sense. If COVID continues to hurt us, we are going to blame the people in power and we'll want new, fresh meat to hopefully change our situation. So I think this is fair. S&P share buybacks double from 2019 levels. I don't know. I'm not sure. This would need to depend on where people's risk tolerances are at, and maybe they are lower, so maybe this does make sense. This I'm really not sure. Small caps see resurgence. Yes, I agree with that. I think small caps will definitely see a resurgence. That is where a lot of the interesting companies are. A lot of these startup genomic companies, smaller AI companies, they are all small caps. It's hard for them to be large caps right now because I believe we are on the cusp of a turning point of all these technologies. Most of the opportunity lies in smaller company. Volatility decay slows. So this would mean he believes volatility will start to increase again and that it's decaying right now. If I had to bet, would volatility come down a little bit? I would think volatility comes down a little bit, but he's saying volatility decay slows, and that's a subtle difference, meaning the rate at which the volatility is coming down slows down a bit. Sure, I think so. I think we were at peak volatilities earlier this year. Now it's already come down a little bit, and it'll probably slow. I agree with that. Anyways, that's the video for today. I think Chris Harvey is one of the smarter and more reasonable analysts that I've disagreed with. His core point, I think, is totally off the mark, but the other points he's making and his predictions mostly make sense, and he seems like a reasonable dude minus this one lapse in judgment. But what are your guys' predictions for 2021? Is Tesla the next AoL? Let me know what you think. I'd love to discuss it with y'all. This is Green Knight Trading, where Squires become knights. Thank you all so much for watching, and I'll see you soon.